Hi friends, very good evening all of you. Welcome back. So today let us start with yet another accounting standard for our CA Intermediate Advanced Accounting class. And this standard today we are going to start is AS 16 titled as Borrowing Costs. Okay, fairly simple standard. If you understand the logics behind the accounting standard, this is very simple and basic accounting standard. But unfortunately, people complicate it. I do not know why. Unfortunately, people complicate it. So let me tell you what is the rationale of this borrowing cost. Okay. Now, say for example, there is an entity A Limited. There is an entity A Limited which borrowed 100 crores from ICICI Bank. The interest rate is 12%. So at the end of the year, the company paid or accrued. Let us assume for the sake of simplicity that they have paid. Okay, accrued or it can be incurred. So the company paid interest amount of rupees 12 crores. How this 12 crores came? 100 crores loan into 12% interest rate. So 12 crores is the interest amount. Okay. So further interest expense incurred, for the interest cost incurred, what is the journal entry? This is the question. What is the journal entry? So Devika, can you tell me what is the journal entry for this situation? In this scenario, for this transaction, what is the journal entry I should pass? Hello.
Sir, ICICI Bank to interest account.
No, let us assume we have paid. We have paid in cash for the sake of ease. Can I say it is interest cost account debit to cash account? If you have paid through bank transfer, instead of to cash, you will write to bank account. That is a different story. I'm not focused about, whether it is paid, whether it is accrued, whether it is paid in cash, whether it is paid through bank transfer. So credit side, I'm not interested. I am focusing on the debit side. Interest cost account debit, interest account debit. Is this correct? Do you think this is correct? 12 crores. Excuse me.
Sir.
Okay. Being interest cost incurred. Okay. Now at the end of the year, when you are passing closing journal entries, what will you do to this? Can I say, if you are preparing profit and loss account, assuming that it is a ledger account, like our traditional accounting, can I say profit and loss account debit to interest account 12 crores being interest recognized as an expense in P&L account, recorded in P&L account. Do you agree with this? Yalni, Devika, all of you, please tell me, do you agree with this?
Sir, I'm not able to see the screen, sir.
You're not able to see the screen. Yalni, you're able to see the screen? Yalni, your voice is, there is a lot of lag. So probably you belong to Chitramma family. So whatever you speak, it is sounding like a song for us.
Sir, I will
Devika,
leave
if
and
you're
come
not
back,
able
sir.
to, pardon me?
I will leave the Zoom and come back again, sir.
Yes, please. Yes.
Yes.
Okay. So this is the journal entry we pass to transfer interest ledger account balance to P&L so that we charge it against revenue. So in this case, what are we doing? We are treating interest as an expense and charging it to P&L. This is the accounting treatment we have done. What is the accounting treatment we have done? We are treating interest as an expense and charging it to P&L, which is absolutely correct. Now the question is, is there any situation where interest cost is capitalized? That means added to asset value instead of charging it to P&L? This is my question. My question is there any situation where you have incurred interest cost and instead of expensing it to P&L, you are capitalizing it, you are adding it in the value of an asset, you are including that as a part of one asset. Then what happens? Asset account debit to interest account. So this 12 crores is capitalized. Is this possible? Is there any situation? Yes. So this is general rule. Whatever I have highlighted in this green color is general rule. This is 100% correct. There is an exception to the general rule. There is an exception to the general rule, and the exception is accounting standard 16. Accounting standard 16 is exception. So what is the rule? Interest cost is to be charged to P&L as an expense. This is general rule. An exception to the above rule is in a specific situation. In a specific situation. What is the specific situation? If the asset is a qualifying asset, if the asset is a qualifying asset as per AS 16, interest cost may be capitalized or is to be capitalized, which forms part of that qualifying asset. That's all. That's all. So now we need to understand two things. There are only two definitions here. One, what is a qualifying asset? Two, what is borrowing cost? Okay, I used the word interest for the sake of simplicity, but in accounting standard 16, they used borrowing cost, which is interest plus some other expenses also. Which is interest plus some other expenses also. Okay, now let us go to our beautiful ICI study material. First, they have given what is the meaning of borrowing cost. Then they have given what is qualifying asset. Then they have given accounting treatment. That's all. Okay. Now, let us start with the definitions. We'll come back to this later. In introduction, they have given one paragraph. Now, let us look at the definitions. There are two definitions. One is qualifying asset, one is borrowing cost. Now, look here. A qualifying asset is an asset that can be a tangible asset or that can be an intangible asset. A qualifying asset is an asset that necessarily takes a substantial period of time to get ready for its intended use or sale. A qualifying asset is an asset that necessarily takes substantial period. What is substantial period? Nowhere it is written what is substantial period, but a general rule of thumb, we may follow 12 months. We may follow 12 months. So if any asset takes 12 months or more to get ready for its intended uses or sale, it is called a qualifying asset. For example, I am constructing a building. I'm constructing a building. I'm constructing a dam. I'm constructing metro station. Okay, I'm constructing a power plant. Okay, so you came to me and asked, hey, Pavan, you are constructing this building now. What is the intention of this? I said, I will complete this construction and I will sell it. Or I will complete this construction, then I will use it for Pavan Kumar and Company Chartered Accountants. So my intention of developing this asset is either to use it or to sell it. That can be a tangible asset, that can be intangible asset. But The only condition is the asset is not ready to use now. It will take substantial period of time. We are constructing a bridge on a river. We are constructing a bridge. It will take 8 years of time. It will take 6 years of time. So logically, when you borrow hundreds of crores or thousands of crores to do these kind of big projects, when you are incurring cost, you are paying this interest cost to ICICI Bank, HDFC Bank, or you borrowed debentures, you issued debentures, you are paying interest to debenture holders, you are paying interest on the bonds, you are paying interest to banks, financial institutions. Pavan sir, my interest cost has become 150 crores, Pavan sir. What should I do? The general rule says charge it to P&L, but there are so many problems here. One matching concept. So this interest cost, whatever you are debiting to P&L, this is not having any, matching economic benefit or revenue in your credit side of P&L. Debit, you are putting to interest 150 crores. Credit, where is the benefit? If it is a working capital loan, or if it is a loan you borrow to run the business and achieve sales, then by sales to interest expense makes sense. But one way this bridge or that dam is being constructed, and the other way you are charging to interest 150 crores, which has no corresponding credit in P&L, so there is no matching concept. You understand? This is point number one. Point number two, when you remember accounting standard 10, they said all the expenses incurred till the asset is ready for its intended use can be capitalized. It includes borrowing cost also. So accounting standard 10 clearly mentioned, accounting standard 26 clearly mentioned, you can capitalize borrowing cost. This is second issue. Matching concept is not there, and accounting standard definition is not met if you are charging it to P&L. That is the reason in this situation, we will capitalize borrowing cost. And then they have given examples. Examples of qualifying assets are manufacturing plants, power generation facilities. Oh my gosh, inventories that require substantial period of time. Inventory. Say, for example, your production process is 6 years. Like, we have discussed wine, timber. There are certain industries where you need to hold inventory for more than 1 year, 2 years. Inventory is also a qualifying asset. Then investment property, you are developing some property just for the sake of investment and capital appreciation. Then also you can capitalize borrowing. So your asset can be asset as per accounting standard 2. Your asset can be asset as per accounting standard 13. Your asset can be asset as per accounting standard 10. Your asset can be accounting standard as per accounting standard 26. Inventory, tangible assets, intangible assets, investment property, all the 4 types of assets can be qualifying assets if they take more than 1 year of time. But 1 year need not be very strictly used. Sometimes even if it is 9 months, 10 months, we can say that it is a qualifying asset. Okay, so it depends on the situation. Then other investments and those inventories that are routinely manufactured or otherwise produced in large quantities on a repetitive basis are not qualifying assets. That means your regular production. Once I'm producing this, it will take 40 days of time, then 10 days I'll store, after that I'll sell. That is not a qualifying asset. That is not a qualifying asset. Assets that are ready for intended use when acquired are also not qualifying assets. Machinery purchased, car purchased. Today you bought car, today you started using car, you might have borrowed money for buying car and you are paying interest. You cannot capitalize. Pavan sir, I purchased a triple bedroom flat in Chennai. 1 crore rupees. I borrowed from HDFC. The asset is ready to use. I have done housewarming. I started living in the property. I am paying interest every month to HDFC Bank. Should I capitalize it? No, the asset is ready to use. When you acquire the asset, if it is ready to use, it can be, an aircraft, it can be a ship, it can be anything. But if it is already ready to use, it is not a qualifying asset. The acquisition, construction, or production, if it takes substantial period of time for the asset to be ready to use, then only it is a qualifying asset. Then they have given clarification chart. PPE, can it be a qualifying asset? Yes, if it takes substantial period. Intangible assets, can it be qualifying? Yes. Investment properties, can it be qualifying? Yes. Inventory, can it be qualifying? Yes. Financial assets, that means investment in equity shares, investment in debentures, investment in any, fixed deposits or something. I borrowed money and I bought equity shares. Possible leveraged investments, we call them. You borrowed money and you invested in equity shares. Equity share is not a qualifying asset. Financial assets are not qualifying assets. Okay, now they are saying substantial period ordinarily 12 months. It can be less or it can be more also. But in general, it is 12 months. In 1-2 problems, you see ICI calculated interest and capitalized, but asset is ready to use within 9 months. Sometimes, when you read RTP, they say production or construction of this civil construction building started on 1st June. It is completed on 31st March. Now, one smart student will calculate and ask, sir, construction started on 1st July and it completed on 31st March. That means only 9 months, sir. The asset is constructed in 9 months. How can you capitalize borrowing cost, sir? How can you capitalize borrowing cost? Do you know what is the interpretation of accounting standard says? This is from IFRS interpretation. There is something called IAS 23, which is borrowing cost, International Accounting Standard 23, which is a part of IFRS. Do you know what they said? There is an example. Now imagine the asset, the building construction takes 15 months. Building construction takes 15 months. You went to the builder and you said, hey, can you build this building with these specifications and this plan for me? Builder said, yes, I will charge 25 crores. Okay. How much of time you want? I will give you in 15 months. So it is a qualifying asset. It is a qualifying asset. So he started construction of that apartment flats, which you are intended, your intention is to sell them. Your intention is to sell them. One fine day, you called the builder and said, hey, we are so happy with your quality of work. You are doing an amazing job. Last 1 month, I observed you, but I have a small request. Instead of doing it in 15 months, can you crash it and do it in 10 months with same quality? The builder said, no, it is not possible. Then you said, bro, please try to understand. If you finish this early, we will have to show the model flats to people and we are trying to launch a Diwali offer. On Diwali, people will have bonuses, people will have, intention to buy new assets. So I want to push this apartment sale during that Diwali. Please. Then the builder said, if that is the case, I'll have to maintain more inventory. I have to order more stocks. I have to order more laborer. I need to put 4 more engineers. I need to put 200 more laborer. I need to put 4 more machines. Oh my God. This is going to be very tough task for me. You said, that's fine. That's fine. How much it will be? The builder said, I need 2 crores more. Initially, I said, I'll construct it for 25 crores. Now I'll do it for 27 crores. You said, deal. Deal. I'll give you 2 crores more. Kardo. Now he is doing it in 10 months. Because he is doing it in 10 months, do you think earlier what was qualifying asset will become not a qualifying asset now? No. Substance over form. This asset is a qualifying asset, but they are trying to finish it before 12 months. That's fine. It is still qualifying asset. That is the reason don't go blindly with 12 months. So this is qualifying asset. 1. 2. What is borrowing cost? There are 5 elements. In borrowing cost, there are 5 elements. First one is interest. Interest and commitment charges on borrowings. What is commitment charge? Say, for example, you borrowed money and the money is in overdraft. Okay, IDBI Bank has given you 10 crores overdraft. Okay. Throughout the year, you have surplus cash and you never utilized overdraft. Now, if you look at, how interest will be charged on overdraft. Now IDBI cannot charge 1 rupee also, but it is a loss proposition for them, no? Now IDBI bank manager will come to your office and ask, sir, why did you come for borrowing? Why you ate my brain? 15 days of processing. I took approval from 4 big officers. Then credit appraisal happened. We came to your place and we verified all the inventory. Valuations are done. And then we give a sanction letter. For that, legal expenses, lawyer fees, stamp duty, all these things incurred. Then we gave you 10 crore rupees of limit, working capital overdraft limit, and you did not use 1 rupee also, and we are not getting 1 rupee of interest also. My boss will call me and slap. What the hell is this? Loan given, 1 rupee benefit is not there. So, whenever you borrow money but you do not use, what banker will do, as a part of sanction letter, they will put a condition that if you are not using overdraft, minimum interest is to be paid as a commitment fee. You need to pay 10 lakh rupees. That is called commitment fee. That is also something like interest on loan only. Because you are not using, they will charge it on a fixed basis. If you are using, they'll calculate how much you are using, how many months you used, how many days you used, how much you used. Based on that, they will calculate and tell you this is your interest cost. So this is component 1. Component 2, amortization of discount or premium on borrowings. That means debentures. Debentures, you issue debentures at a discount or you are redeeming debentures at a premium. That is also cost. Cost of capital. Remember cost of capital? In cost of capital chapter, you calculated. How did you calculate? Cost of debt is equal to interest plus redemption value minus issue proceeds divided by number of years, whole divided by redemption value plus issue proceeds divided by 2. You remember? If you remember that formula, same. Amortization of discount, amortization of ancillary costs relating to borrowings. So you have incurred some expenses on debentures for 10 years. So you will amortize that cost for 10 years. Then finance charges for assets acquired on finance lease. That means even if you acquire asset on finance lease, you will calculate interest as per accounting standard 19. That is also borrowing cost. Then one very, 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 very interesting and important thing is exchange differences. Put a star mark. Put a star mark. There is one question in CA final material that is copy pasted as an example in your CA intermediate material. Now we will see what is the exchange difference that forms part of borrowing cost. Exchange difference, foreign currency exchange differences. That we'll see. So this is borrowing cost. Borrowing cost has 5 elements. So we have seen borrowing cost, we have seen qualifying asset. Okay, now exchange differences, this part is there, no 4.3. We'll come back to this later. Till, after discussion of remaining things, we'll come back. Okay, now there is one example. We'll solve this example also. Now, simple treatment of borrowing cost. That's all. Borrowing cost, ACP. Remember ACP, acquisition, construction, production. These 3 words I used. Borrowing cost directly related for acquisition, construction, production of qualifying assets is to be capitalized. If it is assets other than qualifying assets, then the cost is revenue expenditure, charge it to P&L. Okay, now, Pavan sir, when can you say that borrowing costs are directly related? There is a star mark there. When can you say that borrowing costs are directly related? I borrowed 1 crore rupees from HDFC. I bought a house in Hyderabad. Okay, now simple logic. If I do not buy this house property, I don't need to borrow this money from this bank. From bank, why did I borrow this 1 crore? Only for this asset. So if this asset is not there, that loan is not there. Then it is called directly related. So that could have been avoided. A loan that could have been avoided if qualifying asset is not made. That is called directly related. So simple, borrowing costs relating to qualifying assets are to be capitalized. Other borrowing costs should be treated as revenue expenditure. That's all. Now, recognition criteria. Now, can you read this A and B and can you tell me what are this A and B? Somewhere, did we see A and B somewhere else? Devika, where did we see this? Do you remember we have seen these things somewhere else?
AS to inventory, sir.
AS10.
Yes. All the AS where you are recognizing assets. In AS2, you have seen. In AS10, you have seen. In AS26, you have seen. If you read AS13, you will see this. So it is probable that future economic benefits will come and the cost can be measured reliably. That means this is the quality of asset. So here borrowing cost is to be capitalized, no? Means it is forming part of asset. So it has to meet that recognizing criteria. Now, another very important concept here is borrowing costs are of two types: specific borrowings, general borrowings. And the accounting treatment for both specific borrowings and general borrowings is separate. Now, there are two types of borrowings. There are two types of borrowings. One, specific borrowings. Two, general borrowings. So specific borrowing means a loan or this loan is borrowed specifically to acquire this asset. That means ICICI Bank loan 2 crores used to construct a qualifying asset valued 3 crores. So this is a specific borrowing. This is a specific borrowing. Now L&T is constructing metro in Chennai. For example, L&T is constructing metro in Chennai. For that, metro is a qualifying asset. Value is 10,000 crores. Okay, L&T has 8% debentures. 8% debentures. How much? This is 1,500 crores. Okay. HDFC loan at 14%. It is 1,500 crores. Okay. Then loan from subsidiary company. They borrowed money from subsidiary company at 12% or holding company. It is 4,000 crores. It is 4,000 crores. And they have working capital loans from different banks, working capital loans, 2,000. Okay, now all these monies are used in this. Can they do that? They can do that. They can do that. All these monies are used for this. All these four monies are used for this. Okay, this is a qualifying asset. These are borrowings. There is a borrowing cost. But none of these loans are specifically borrowed for this metro project. All these are general loans. See, when I take a motor vehicle loan from ICICI Bank, I need to buy car. Car loan I have taken, I need to buy car. Housing loan I have taken, I need to buy house. Correct. But what if I take a personal loan? Personal loan, 10 lakhs I have taken from ICICI. Can I buy jewelry for my wife? Yes. Can I go for a shopping? Yes. Can I go for a Dubai trip? Yes. Can I gamble with that money? Yes. Can I go to a casino? Can I buy a laptop? Yes. Can I buy a car? Yes. That is a general loan. Personal loan is a general loan. You can do anything with that. So all these loans are, in general, they borrowed and they're using for this particular asset. This is called general borrowings. So loans are of two types: specific borrowings, general borrowings. Now we'll see the accounting treatment also. But before that, let us see one problem. Devika, can you read question number 1, please?
Yes, sir.
Hmm.
PRM Limited obtained a loan from a bank for rupees 120 lakhs on 30/4/2021, utilized as follows. Particulars amount in lakhs. Construction of a shed, rupees 50 lakhs. Purchase of machinery, rupees 40 lakhs. Working capital, rupees 20 lakhs. Advance for purchase of truck, rupees 10 lakhs. Construction of shed was completed in March 2012. The machinery was installed on the date of acquisition. Delivery of truck was not received. The interest charged by the bank for the year ending 31/3/2012 was rupees 18 lakhs. Show the treatment of interest.
Tell me, what is the amount of loan? You borrowed 120 lakhs. Very good. On 120 lakhs, what is the interest paid? 18 lakhs. So total loan. The heading, question number 1. Illustration number 1. Total funds borrowed 120. Total funds borrowed 120. Interest paid 18. These are in lakhs, rupees in lakhs. Okay, very good. Now the question is, can this 18 lakhs interest be capitalized? Hello, hold. This interest can be capitalized only if the asset for which it is used is a qualifying asset. For which this 120 lakhs is used? Construction of shed. Now you tell me, Devika, do you think construction of shed, is it a qualifying asset?
Yes, sir.
Can be. It can be a qualifying asset. What do you think? Purchase of machinery.
Not a qualifying asset.
Excellent. It is not a qualifying asset. Why it is not a qualifying asset? One, you bought the machine. Two, the machine is installed on the date of acquisition. That means it is already ready to use. So second one is not a qualifying asset. What about working capital?
Not a
Working
qualifying
capital
asset.
can never be a qualifying asset. Working capital can never be a qualifying asset. In general, if it is working capital, it is not a qualifying asset. Unless in that exceptional cases where it is used for acquisition of inventory, which takes substantial period, that is exception. Normally, if they say working capital, forget about it. Then what about you paid advance for purchase of a truck?
Not qualifying asset.
Not a qualifying asset. So out of 50 plus 40, 90 plus 20, 110 plus 10, 120 lakhs you borrowed and used like this, there is only one qualifying asset. Okay. So qualifying asset, how much? 50. Not qualifying assets, how much? 70. So is it logical if I distribute this 18 lakhs in 5:7 ratio, and whatever is relating to qualifying asset, it can be capitalized. Whatever is relating to others should be charged to P&L. So qualifying assets 50 lakhs, not qualifying assets 70 lakhs. So I'm calculating interest cost proportionately is equal to I have incurred 18 into 5 divided by 7 ratio is equal to 18 I have incurred into 7 by 12. Hello, wait. 5 by 7, rubber 5 by 12. Okay, 5 by 12 this is. How did I calculate this? It is 18 into 5 upon 12. It is 18 into 7 upon 12. This is interest cost. Okay, accounting treatment. Accounting treatment. This is to be capitalized. This is revenue expense charged to P&L, treated as an expense in statement of profit and loss. So the journal entry is interest account debit to bank account. 18 lakhs being interest paid. 18 lakhs being interest paid. Interest cost incurred or interest cost paid, whatever it is. Okay. Need not be on cash basis. It can be on accrual basis also. Now, what is the accounting treatment? Cost of shed, construction of shed is there, no? So factory shed account debit 7.5 to, sorry, wait, P&L account debit. P&L account debit 10.5 to interest rate 80. Being interest on qualifying asset is capitalized and interest on non-qualifying asset is expensed to statement of profit and loss. This P&L account debit is there, no? Again, I'm telling you, in every standard, I'm telling you, in every class, I'm telling you, previously, we used to call profit and loss as a ledger account. That is the reason P&L account existed. Now we are using only a statement pro forma, so it is no more a ledger account. But still, just to make you understand, I'm using this P&L account debit, just to make you understand. Okay, so everybody, you understand this answer to question number 1? Devika, Yalni, and everyone else?
Yes, sir.
Borrowing cost to be capitalized 7.5, interest to be debited to P&L is 10.5. That's all. Now, specific borrowings. In case of specific borrowings, put the heading. In case of specific borrowings, interest cost incurred on specific borrowings XXX less any income on temporary investments, net interest that can be capitalized. Pavan sir, what is this? Pavan sir, what is this? Now, simple. I borrowed money from ICICI Bank. How much? 100 crores. Okay. So, conservatively, if you are a businessman, will you borrow money before starting the construction or will you borrow money after starting the construction? Yalni, when will you borrow money? Will you borrow money before construction of asset or will you borrow money after commencement of construction?
Before construction.
Excellent. Because after commencement of construction, if banker is not giving you loan or if there is a process delay, will you halt production? Will you halt construction of asset? Stupidity it is. So even before doing Bhumi Puja of that apartment, first you will go to banker and you will put a proposal. You will ask him and say, this is the proposed asset. This is the proposed asset. Now banker gave you loan. You borrowed 100 crores. You thought you will start this project in Jan 24, but now you realized you will be able to start the project only on September 2024. You wanted to do it in Jan. You got the money. You received loan, but it will be, the project will be started only in September. So you have 8 months, 100 crores, 8 months in your hand. Now you tell me, for this 8 months also, do you need to pay interest?
Yes, sir.
Yes, sir.
Obviously, you need to pay. Now, what will you do? You studied financial management. You are a chartered accountant. You have the common sense. You are a businessman and you are my student. So, will you keep 100 crores idle in that loan account and will you pay interest? Or, Pavan sir, I have common sense. I will withdraw money from the loan. Probably I'll put in some mutual funds or at least a bank fixed deposit. If no other investment option is there, I will at least put it in a fixed deposit in the same bank. Because for term loan, I need to pay 12%. At least in fixed deposit, I'll get 7%, 8%. So remaining 3%, 4%, whatever that spread is there, that is my cost. That I'm okay. But I'll not keep 100 crores idle and pay 12%. No. Sir, I have paid 12 crores as interest, but during this 8 months, whatever I have invested money, I earned income of 8 crores. Then the borrowing cost that can be capitalized is actual interest cost incurred 12 crores minus interest income from that temporary investments 8 crores. So only 4 crores can be capitalized. That is this pro forma. Do you understand this? Is it making sense? Is accounting making sense? See how simple the concepts are, how simple the logics are. Is it okay?
Yes, sir.
Okay. Now, sir, what if it is a general borrowing? If it is a general borrowing, we will have to calculate. If it is general borrowings, we will have to calculate weighted average interest cost. Weighted average interest rate you will calculate. To calculate time proportioned value of qualifying asset. Sir, first thing I understand, I know how to do that weighted average interest rate and all, because 4 rates are there. I know how to do that. That is not a nuclear science. For example, if you go back to this example, okay, so you are paying, it is simple. Look here, you are paying, this is 8%, right? Okay, now this can be understood easily. So what is the interest cost? This into this, this into this, this into this. So total I paid interest of this much and total money I borrowed is this much. So I borrowed 9,000 crores and I paid 1070. So what is my weighted average interest cost is equal to this divided by this 11.89%. This is my weighted average interest cost. When you have general borrowings, different loans, different amounts, different interest rates, calculate weighted average. Pavan sir, can I apply 11.89 crores on this 10,000 crores and can I capitalize? No. No. Pavan sir, can I capitalize 1070, please? No. But Pawan sir, 1070 is the interest amount I have paid to the debenture holder, HDFC, subsidiary company, and the bank that has given working capital loan. I paid 1070. Hold on. You paid 1070. But this metro qualifying asset, 10,000 crores is there, no? Did you incur the whole 10,000 crores on a single day? No. That means, imagine on Jan 1st, you have incurred 500 crores. On Feb 15, you have incurred 1,500 crores. On September 22nd, you have incurred 1,850 crores. Okay, on 1st December, you might have incurred another 1,342.5 crores. Like this, you are incurring. Like this, you are incurring. That means you are not incurring the whole money on single go. Now, if you observe this 500 crores, assuming that your accounting year is a calendar year. Assuming that your accounting year is a calendar year. That means you are preparing balance sheet on 31st December. Then this Jan 1st 500 crores is utilized for 12 months. Feb 15, 1,500 crores is utilized only for 10.5 months. This 1,850 crores is used only for September 8 days, October, November, December. Only 3 months. And this 1st December money you have incurred only for 1 month. So you will calculate time proportioned value of the asset. Now you apply this this weighted average cost of interest, whatever you calculated on the time proportioned value of the asset. That's all. Simple. Now remember the rule. This less any income from temporary investments is there, na? It is only applicable for specific borrowing. It is not applicable for general borrowings. Because anyway, that general borrowing whole money is not intended for this asset. No, you can do anything with that general borrowing. So you might be investing that general borrowing money in some asset. You might be earning some return on investment. You might have invested in mutual funds. You might have invested in money market instruments. You might have invested in equity shares. You might have invested in preference shares. You might have invested in investment property. You might be getting rents. You might be getting dividends. You might be getting interest. But that is none of my business. Only in case of specific borrowings, I'll do that. Now the question is, Pavan sir, what if for one project, I have both specific borrowings and also general borrowings, Pavan sir, which is possible? Then the accounting treatment is different. If you use only specific borrowings, follow this. If you use only general borrowings, follow this. If you have both specific borrowings and general borrowings, oh, Pavan sir, I'll get mental, Pavan sir. Don't worry, simple calculations. First, tell me, step one, did you understand specific borrowings? Step two, did you understand general borrowings? If you say yes, then we'll go to solve 1, 2 problems. Then you understand everything.
Yes, sir.
Is this clear? Okay, so this is specific borrowing. This is general borrowing. They're telling you step one, calculate capitalization rate. What is capitalization rate? That weighted average interest rate. 2, amount eligible for capitalization. 3, cross-check that the amount of borrowing cost capitalized should not exceed amount of borrowing cost incurred during the period. For example, in this case, what is the amount incurred? 1070. Borrowing cost capitalized cannot exceed 1070. No? How can you capitalize borrowing cost more than how much you paid actually? You understand? That is what they are saying. Don't worry. We'll see all these things. We'll see all these things. Now, very, very, very important question. We'll see 4 questions in ICI study material in this accounting standard. All the 4 are important from exam point of view. So can you read this question number 2, please, Devika?
Yes, sir. X Limited began construction of a new building on 1st January 2021. It obtained rupees 1 lakh special loan to finance the construction of the building on 1st January 2011 at an interest rate of 10%. The company's other outstanding 2 non-specific loans were...
Wait, that means they are saying there is a specific loan. Specific loan carries 10%. Okay, very good. And there are 2 non-specific loans. Non-specific means general. So on 5 lakhs, 11%, on 9 lakhs, 13%. So there are 2. Continue.
The expenditures that were made on the building project were as follows. January 2021, 2 lakhs. April 2021, 2 lakh 50,000. July 2021, 4 lakh 50. December 2021, 1 lakh 20. Building was completed by 31st December 2021. Following the principles prescribed in AS16 borrowing cost, calculate the amount of interest to be capitalized and pass 1 journal entry for capitalizing the cost and borrowing cost in respect of the building.
Pass how many journal entries?
1 journal entry.
1 journal entry. For everything put together, they want only 1 journal entry. Okay, now let us see. Step 1, calculate weighted average interest cost capitalization rate. Can you calculate and tell me what is weighted average capitalization rate? Step 1, calculation of capitalization rate. What is capitalization rate? Weighted average interest rate. Okay, so we have loan 5 lakhs, 9 lakhs. So we have loan 1, loan 2. So this is borrowings. This is amount. This is interest rate. This is interest cost in rupees. Interest amount rupees. This is 5 lakhs and the other one is 9 lakhs. Idiots, still I did not get any answer in the chat box. I'm looking at if someone tells me faster than me, I would have felt like I'm Dronacharya hit by Arjuna. My student is doing this faster than me. But you will never do that.
Twelve percent.
12.29%. Correct? Huh?
Yes, sir.
This is step 1. Now, what is step 2? Calculate qualifying asset eligible amount. Step 2, calculate qualifying asset eligible amount. We are following this. Amount eligible for capitalization. Amount eligible for capitalization, which is nothing but weighted average, time proportioned weighted average of the capital incurred. Okay. So, Jan, April, July, December. Okay. Amount, tell me. Amount. 2, 2.5, 4.5, 1.2. 2, 2.5, 4.5, 1.2. Okay. Is it right? Numbers? Time. From the date it is incurred till the balance sheet date you need to count. From the date it is incurred. If I have incurred that amount in Jan, that means I utilized it for all the 12 months. 12 by 12.
9 by 12.
Correct? 12 months. Okay. So this is April means 9 months. Huh?
Yes, sir.
July means 6 months. Huh?
12.
December
1 month.
means 1 month. Huh? So value, weighted average value is equal to this into 12 by 12 is equal to this into 9 by 12 is equal to this into 6 by 12 is equal to this into 1 by 12. So the total amount is sum of this 4. So this is our qualifying asset weighted average. This is qualifying asset weighted average. Did we do any mistake? Hey, this is not 1 by 12, this is 12 by 12. Yes. So you understand this? Step 1 is clear, step 2 is clear. Devika, everything clear, ma? Calculations and all, you're okay?
Yes, sir.
No. Can I say borrowing cost to be capitalized is equal to 6,22,500 into 12.29%. Can I say that?
No, sir.
Very good. If the
Yes,
whole borrowings is only general borrowings, you could have done this. But for this 6,22,500, how you used loans? Usage of loans.
1
First,
lakh
you
yearly
have specific borrowings. What is the amount of specific borrowings you have? What is the
lakh.
amount of specific borrowing? 1
1 lakh.
lakh. 1 lakh. 1 lakh. So this carries 10% interest. So can I say interest cost to be capitalized is like this in case of specific borrowing? Actual amount paid. In case of general borrowings. This is important. How will you calculate this? Total value of the asset is 6,22,500, which
Minus 1
is
lakh.
financed by 1 lakh of specific loan. Over and above is your general borrowings is equal to this minus this 5,22,500. For this, you apply this 12.29%. So the total borrowing cost that can be capitalized is this two put together. Total borrowing cost to be capitalized. That's all. Total borrowing cost to be capitalized is 74,215. Now we need to pass one journal entry. They asked you to pass only one single journal entry. Okay. Now, can this be capitalized? Yes. Can this be capitalized? Yes. Can this be capitalized? All these things are capital cost. So, building account debit. If it is building, whatever the asset is, building account debit. So, this is 2 lakhs plus 2,50,000 plus 4,50,000 plus 1,20,000. Can you add and tell me all these four numbers? Add and tell me all these four numbers.
10,20,000.
So, building account debit 10,20,000. Now, borrowing cost also to be capitalized. Borrowing cost, add to building. Borrowing cost, or you can say building in brackets borrowing cost. How much it is? 74,215.3 to bank account. This plus this. See, this can be material, labor, overheads, all these things. This is borrowing cost. So total, you have spent 10,94,215 for both put together. That will be the journal entry. See, cost of building, add interest. Too bad. Look here. So, did you understand this working note 1, weighted average of expense, working note 2, weighted average of interest rates, working note 3, how do we calculate interest on specific borrowings and interest on non-specific borrowings, working capital, working note 4 and 5 journal entry. That's it. Is everything clear here? Guys, all of you, please let me know.
Yes, sir.
I have a general knowledge doubt. Is accounting easy or difficult, ma?
Easy but not easy.
Easy but not easy. There is one movie, Telugu movie, where Kirti Suresh tells the hero, I love you, but I am not in love with you. That guy will become mental, and full movie, he'll be confused, he'll bang his head onto the wall, he will be drinking beer and he'll be thinking, what is this dialogue? I love you, but I'm not in love with you. So our love towards ICA is like that. ICA's love towards us is like that. And the difficulty level of each subject is like that. Ayyo, Rama. Then they are saying commencement of capitalization, then suspension of capitalization, then cessation of capitalization. Sponsor, what all these things sponsor? Don't worry. Simple. You can understand it from here. Okay, so Devika, can you read this out? Read this loud.
Capitalization of borrowing cost is subdivided into 3 parts: commencement, suspension, and cessation. Under commencement, expenditure for qualifying asset is being incurred. Borrowing costs are being incurred. Activities to prepare the qualifying asset is in the progress. Under cessation, during extended period in which activity development is interrupted.
Active development is interrupted.
Under cessation, when substantially all the activities are complete.
So basically, they have given 3 paragraphs. Dear ICI, when can I start capitalizing BC? Dear ICI, when should I hold capitalizing BC? Dear ICI, when should I stop capitalizing BC? So these are traffic lights. This is green, this is amber, or yellow, and this is red. Here, start capitalizing green. Here, hold on. Don't capitalize this. This is stop. When should I start capitalizing? Simply, did you borrow money at all? Yes, sir. Did you start incurring expenditure for qualifying asset? Yes, sir. Whether activities that are required for development of the property or construction of the property, are they going on? Yes, sir. Very good. Check 1, expenditure incurred towards qualifying asset. Check 2, borrowing costs are incurred because I borrowed money. Check 3, activities on qualifying asset are actively going on. When these 3 conditions are satisfied, start capitalizing BC. Start capitalizing. Any of these 3 conditions failed, you cannot capitalize borrowing cost. You have to put that borrowing cost only in P&L. Pavan sir, I borrowed money, but none of the activities have started. I have not even identified, where to construct. I borrowed money, but construction not started. Planning not started. No activity on qualifying asset is going on. Then you cannot capitalize. So this is commencement. Now, do you remember yesterday I gave you an example in the previous session? If there is any abnormal cost, that should never be part and parcel of, the cost of production or the cost of the asset. In that context, I told you clearly about borrowing cost. You are constructing a dam or a bridge on a river, and the water levels are high, and the chief engineer came to you and told, Pavan sir, we have to halt construction for 1 month. Why? Because of heavy rains, because of heavy water. It is danger. If we start, if we continue construction, that might hit the quality of the asset, or in the worst case, that might cost the lives of the people who are working there. It is not recommended. Then we said, okay, if that is the case, halt, stop construction for 1 month, 2 months, no problem. Now, is it avoidable? Is it non-avoidable? If it is water level, if it is, flowing river, if it is rains, it is unavoidable. So that 1 month, you can continue capitalizing borrowing cost because it is abnormal. Sorry, it is normal. It is normal, unavoidable. But, Pavan sir, labor strike, machinery breakdown, lack of availability of raw materials, because of some avoidable reason, they stopped. The laborer stopped construction for 2 months, and I incurred borrowing cost. Can that be capitalized? No, that is abnormal cost that should be charged to P&L. This is the whole discussion. In simple, what they said, during the extended periods, that 1 month, 2 months, where active development of the qualifying asset is interrupted, that particular period, hold on, don't capitalize borrowing cost. For this particular period, borrowing cost should be charged to P&L. Pavan sir, when should I stop capitalizing borrowing cost? They did not say when the asset is complete. They said when substantially all activities are completed. What is the meaning of that? You constructed a commercial complex which has 100 shops. So commercial complex is completely ready. You started giving shop by shop on lease. You have given, say, for example, 15 shops on lease, remaining 85 shops. You are waiting for the lessee to come. Once they give advance, you just want to put the tiles and, do the roofing, give possession to them in 1 month. That is the stage. Now, businessmen, they are very smart. They say, dear ICI, no. Construction is not complete. 85 flats, 85 shops, still construction is going on. I keep on capitalizing my interest cost to asset. ICI says, are you kidding me? All the activities necessary are done. Some administrative works are pending. Some plumbing, some electric, which are basic, which you can do anytime. If these are the pending things, stop capitalizing borrowing cost, charge the borrowing cost P&L, because the asset is substantially complete. That is what they said, cessation. So this three will never affect any of your problems. So this is only theory. Okay. Now disclosure, good news. This is the standard with least minimum disclosures. If you look at inventory, if you look at property, plant and equipment, if you look at intangible assets, if you look at amalgamation, these kind of disclosures, if you see, they keep on, they run into pages and pages and pages and pages. Here only two things. Point number one, what is my weighted average borrowing cost? Interest rate. Okay. Accounting policy relating to that. How did you calculate that and all? Two, what is the amount of borrowing cost capitalized? For example, in the previous example, that 74,219 some amount is there. That you will write in notes to accounts. During the year, an amount of 74,219 is capitalized towards so and so asset. That's all. That is one disclosure. Second disclosure is we have calculated, our accounting policy is to calculate interest rate like this, and this is our interest rate. That's all. That's all. Simple. Now, can you read illustration 3, please?
The
Devika?
company has obtained institutional term loan of rupees 580 lakhs for modernization and renovation of its plant and machinery. Plant and machinery acquired under the modernization scheme and installation completed on 31st March 2022 amounted to rupees 406 lakhs 58 lakhs has been advanced to suppliers for additional asset, and the balance loan of rupees 116 lakhs has been capitalized for working capital purpose.
Hold on. Is this 406 qualifying asset?
Yes, sir.
Yes. Is this 58 lakhs given advance to suppliers qualifying asset?
Yes. Yes, sir.
No. You are giving advance to supplier for some additional asset. It is not for that qualifying asset. When you have given advance to a supplier, how can that be qualifying asset, ma? If you are giving that money to a supplier for the same modernization scheme, then you can say that, Pavan sir, this 406 plus this advance given to suppliers also. These are other assets. It is something like, advance given for a truck. In question number 1, you said, no, this is not a qualifying asset. Same thing. You understand?
Okay, sir.
Is this one? No, you are telling okay as if I'm forcing you to agree.
No, I thought that this was same asset, sir. I did not notice the additional asset.
There are always 3 answers to every question. One is right answer. One is wrong answer. One is ICI answer. Students, they know right answer, they know wrong answer, but they do not know what is ICI answer. This is the reason many people will get heart attack in exam hall. So these are gray areas, okay? This is where you need a lecturer. This is where you need practice. So 406 qualifying asset, 58 not a qualifying asset, then 116 is working capital. This is also not a qualifying asset. Now the accountant is on dilemma as to how to account for a total interest of 52.2 lakhs. Simple, like question number 1. How much of the amount is to be capitalized? Can I say 52.2 lakhs into 406 divided by 580 can be capitalized? Oh, advance to suppliers, they have given qualifying asset, dude. You are right, I am wrong. Devika, now I should get a heart attack, not student. This was a final question. I remember with 200% confidence that this 56 was not a qualifying asset. But chalo, wait. Plant and machinery acquired under modernization scheme and installation completed on 31st March. Okay, 406. 58 lakhs has been advanced to suppliers for additional assets. Okay. And the balance 116 is working capital. Okay. So Now it is a heart attack for me. But anyway, this is ICI version. So 406 qualifying asset. 58 is also qualifying asset. Oh, this is the reason Devika was sounding okay, sir. So probably you have this answer in your hand. Is it so? Hello?
No, sir. No, sir.
Okay, 406 qualifying asset, calculate proportionately. Then advanced suppliers for additional assets also qualifying asset. But do you remember here in question number 1, what did they do? In question number 1,
Sir, but in previous question for
advance
construction
for
of truck.
purchase of another asset is not a qualifying asset.
Yes. That's what my doubt is.
Yeah, I know. So maybe like what Devika said, we have to interpret that this 58 lakhs is also for the same construction of asset. It is not a separate asset. They said additional assets. They did not say separate assets. So maybe ICI interpretation is the person who wrote this question, he meant 406 is already incurred. 58 lakhs also is for same modernization and renovation. We are waiting for the components. Once they come, you will install it again here. That might be the interpretation. But if I am the one who's writing the answer, or even if I am the professor I'm the person who's developing question paper, I would have put 58 as not a qualifying asset. But follow ICI answer, then write a note. So if it is for a motor vehicle or any other machinery, it will not be a qualifying asset. But in this case, you can say that 58 lakhs also is a qualifying asset. Under that, write a note. It is assumed that the advance paid to suppliers for acquiring additional assets worth 58 lakhs is also for the same purpose of, category 1 of assets. It is better if you write a note. Then check the calculations. You understand these calculations? So 406 plus 58 qualifying assets, 116 not a qualifying asset. Check the calculations. Devika, let me know if you understand these calculations.
Yes, sir.
Just like question number 1 with a small twist. See this, they have given regarding purchase of additional assets, the nature of additional assets has also been considered as qualifying assets. Alternatively, the plant and machinery and additional assets may be assumed to be non-qualifying assets. Now I am happy. My answer is also right. Your answer is also right.
Yes.
Hello.
Yes, sir, clear.
Okay. You can write a note like that. Now, last question. After question number 4, we are done with whole accounting standard 16. Then there might be some questions in test year practice that you can do later. Question number 4 is very, 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 very important. Again, a CA final question. Devika, can you read this question, please?
Sir.
Read this, please.
Take Limited has borrowed rupees 30 lakhs from State Bank of India during the financial year 2021 and 2022. The borrowings are used to invest in shares of Give Limited, a subsidiary company of Take Limited, which is implementing a new project estimated to cost rupees 50 lakhs. As on 31st March 2022, since the said project was not complete, the directors of Take Limited resolved to capitalize the interest acquiring on borrowings amount rupees 4 lakhs and add it to the cost of investments. Comment.
So, look here. Company is implementing a new project. Okay. Estimated cost 50 lakhs. Okay. Borrowings from parent 30 lakhs. Okay. Borrowing cost 4 lakhs. Okay. Everything is good. But do you know what is the biggest challenge in this question? 99% of students will write a wrong answer. 99% of students will write a wrong answer. Why, They read everything, but what they fail to understand is there are two companies here. One is parent company Take Limited, one is subsidiary company Give Limited. Take Limited borrowed 30 lakhs from SBI and paid 4 lakhs. Now, what is the asset Take Limited acquired? They are the shares, equity shares in subsidiary company. Is it a qualifying asset? Now, student will argue, but Pavan sir, the money is used in implementing a new project, which is a qualifying asset. Array, idiot, that qualifying asset is in the books of the subsidiary company. Now, look here, how dangerous this question is. There are two companies, Take Limited, which is parent, Give Limited, which is subsidiary. I'm confused. Names should be in reverse, no? Parent company should be giver, subsidiary company should be taker. That is where they say don't use more brain. Take Limited is parent, correct? Take Limited is parent, Give Limited is subsidiary. Okay, but if you look at your parent and you are the taker, parent is the giver. Okay, here reverse, no problem. So, borrowed funds. How much? Borrowed funds, how much? 30 lakhs. From SBI. Okay, very good. Very good. You borrowed money. That's fine. What is the asset acquired? Asset acquired are equity shares in subsidiary company. Is it a qualifying asset? The answer is equity shares are not qualifying assets.
No.
Do you remember first paragraph? I said we will come back to it little later. This is what they have written. Equity shares are not qualifying assets. Equity shares are not qualifying assets. So read this. The directors, since the said project was not complete, the directors of Take Limited resolved to capitalize the interest accruing on borrowings amounting 4 lakhs and added it to cost of investments. Comment. So, Take Limited, what they have done, investment in equity shares of subsidiary company, 30 lakhs. Add borrowing cost to be capitalized, 4 lakhs. Total asset, 34 lakhs. This is what the journal entry, this is what the accounting treatment Take Limited wants to. Do you agree with them? The answer is wrong. This is wrong.
No.
This is wrong. You cannot capitalize this 4 lakhs. You have to charge it to P&L because the asset in your books is not bit qualifying asset. No, the project and all is in subsidiary company books. For you, what is the asset? Equity shares in subsidiary. Is it a qualifying asset? No. So that's it. That's it. So first they have written about accounting for investments, and then they have written further. Read this. As per AS 16, can you read this, please? Read the whole answer. Read the first paragraph also.
As per AS 13 revised, accounting for investments, the cost of investment includes acquisition charges such as brokerage fees and duties. In the present case, Take Limited has used borrowed funds for purchasing shares of its subsidiary company, Give Limited. Rupees 4 lakhs interest payable by Take Limited to State Bank of India cannot be called as acquisition charges. Therefore, cannot be constituted as cost of investment. Further, as per para 3 of AS 16 borrowing cost, a qualifying asset is an asset that necessarily takes a substantial period of time to get ready for its intended use or sale. Since shares are ready for its intended use at the time of sale, it cannot be considered as qualifying asset that can enable a company to add the borrowing cost to investments. Therefore, the directors of Take Limited cannot capitalize the borrowing cost as part of cost of investment. Rather, it has to be charged to statement of profit and loss for the year ended 31st March 2022.
Super. That's it. So, Devika, do you understand this answer?
Yes, sir.
So, are we done with this accounting standard?
Yes, sir.
No. Something is pending.
4.3, para 4.3.
Yes. Foreign currency. Exchange losses. Okay, let us see what it is. Let us see what it is. Okay. Now they have given so much of theory. So in the clarification chart, they are saying if there is exchange gain, credit to P&L. If there is exchange loss, lower of the following is treated as part of borrowing cost. 1, actual exchange loss. 2, the difference between interest on local currency borrowing and interest on foreign currency borrowing. Note, the excess exchange difference, if any, will be charged to P&L. But already they have said above, no? Okay, this is a different. Okay, now, in borrowing cost definition, they said exchange differences to the extent they are regarded as an adjustment to interest cost is borrowing cost. Now, we'll write in notes. Borrowing cost includes exchange losses if they are considered as, or to the extent they are considered as adjustments to interest cost. Sponsor, what is this sponsor? What is this sponsor? Now, there is X Limited having headquarters in Bangalore. Okay. X Limited has place of business in UK also. So X Limited is in need of 100 crores fund. Okay, they want to borrow this money. So X Limited inquired State Bank of India. SBI is ready to give interest. SBI is ready to give loan at an interest rate of 12%. Then X Limited inquired Barclays in the UK. Their interest rate is 5% per annum. Developed country. Interest rates will be low. Now I cannot say developed country because last year India surpassed UK in terms of GDP. So we are, I think, 5th in the world. They are 6th in the world. But developed economy for long, no? That is the reason their interest rates, mortgage rates are very less. Interest rates are very less. UK is having a crisis of highest inflation and interest rates, the highest in the last 40 years now. Last 1 year, 2 year, they are struggling like anything. Okay, but still keeping all these things aside, now imagine the situation. If you are MD of this X Limited, Devika, you tell me, will you borrow money from SBI or will you borrow money from Barclays? Both of them are ready to give loan to you. From where you borrow? Obviously, borrowing money from Barclays is beneficial. So company can save 7% interest on 100 crores, which is 7 crore rupees. Why do you want to lose that? So do you understand the logic? Why company borrows money in foreign currency? But now there is a problem. Did you see any concern here? Is there any challenge here?
Yes, sir. Exchange rates.
Yes, because Barclays will not give you loan in rupees. No, you'll have to convert and take equivalent money in pounds. So today when you borrowed, when X Limited borrowed, 1 pound is equal to 100 rupees. 1 pound is equal to 100 rupees. So X Limited borrowed 1 crore pounds and converted 1 crore pounds into 100 rupees. So they got their 100 crores. They are very happy. But at the end of the year, when X Limited is repaying the loan, 1 pound is equal to 104 rupees. So X Limited has to paid how much? 1.04 crores. 1.04 crore pounds. So X Limited booked an exchange loss of 4 crores. So you understand this example? Devika, do you understand this
Yes,
example?
sir.
Yes, sir.
So ICI says, accounting standard 16 says, hey, Pavan, don't worry. Don't worry. What is the actual interest paid? What is the actual interest paid to Barclays? So you have paid 5% on 100 crores, which is 5 crores. What is the interest paid? 5 crores. Or you might have calculated is equal to 5 crores into that 4% increase is there, no? How do you calculate it? Is equal to C. 1 crore pounds. 1 crore pounds into 5%. 1 crore pounds into 5%. That is how much you need to pay. But today, at the end of the year, it is 104 rupees, no? So 5.2 crore pounds you have paid to them, not 5. Because when you are paying at the end of the year, rupees 104 rupees is 1 pound. So you paid 5.2 crores. Actual interest paid to Barclays. How you paid it? You have paid it on 1 crore pounds into 5% into on the date of payment 104 rupees. On the date of payment 104 rupees. So it is like this. Actual interest paid is like this. Okay, now there is an exchange loss. There is an exchange loss. How much? 4 crores. So total borrowing cost, including exchange loss, is this plus this. Now, Pavan sir, this is clear. No problem in that. This exchange loss, to what extent we can take? What if the company loses too much of money? Say, for example, if it is 4 crores, will ICI accept it? The answer is yes. Why, you know? ICI's logic is this. If Pavan borrows the same money in SBI, I would have allowed Pavan to capitalize 12% interest on 100, which is 12 crores. Now, Pavan is asking 9.2 only, no? Simple logic. Had the money been borrowed in local currency, what would be the interest cost? 100 crores into 12%. 12 crores. If the money is borrowed, had the money been borrowed in local currency from local bank, interest cost is equal to 100 crore rupees into 12%, that is equal to 12 crores. So till this, if Pavan wants to capitalize actual interest cost paid to a foreign bank plus exchange loss, I will allow. But the moment Pavan says, sir, dear ICI, sir, this is 5.2, sir, but I lost 15 crores in exchange. So total, my interest cost is this much. Then ICI will call me and say, at one slap, a shameless guy. If this is the case, why you borrowed from Barclays Bay? Why can't you borrow from SBI? Sir, that day I thought something different, but today something different happened. Then SBI says, go to hell. So here you said, dear ICI, I lost 15 crores in exchange loss. Can I consider this as borrowing cost? ICI says, no. Exchange loss to the extent of difference between interest on foreign currency loan and interest on local currency loan. The difference, to that extent, I will allow you. What is the difference? Interest on rupee loan could have been 12. Interest on pound loan is 5.2. Difference is this minus this. So, to the extent of 6.8 crores, if you say, Pavan sir, I lost exchange loss. I lost money in foreign currency exchange. Then ICI says, okay, 6.8. To the extent of 6.8, I will allow you. But you lost 15. So 6.8 can be capitalized and see, total loss 15 crores. How much can be capitalized? 6.8. How much to be charged to P&L? How much to be charged to P&L as foreign currency exchange loss? This minus this. This is the accounting treatment of your total loss. So this is what they said. Borrowing cost includes exchange difference to the extent they are regarded as adjustment to interest cost. So your interest cost can be adjusted, can be increased using this exchange loss to the extent of difference between local currency loan and foreign currency loan. Beyond that, if there is a loss, you have to charge it to P&L. It cannot be capitalized. This is the concept. Is this clear? Yalini, is this clear?
Yes, sir.
Devika, is this clear?
Yes, sir.
So now they have given one example. Look here. XYZ Limited had taken a loan of US 10,000 on April for a specific project at interest of 5%. Okay. Payable annually. On 1st April, the exchange rate is 45. Okay. The exchange rate as on March 31st is 48. That means you lost 3 rupees. The corresponding amount could have been borrowed by XYZ in local currency at 11%. So US dollars, USD loan 10,000. Foreign currency loan rate 4%, 5%. Local currency loan rate 11%. Exchange loss 3 rupees. Total exchange loss is equal to 10,000 into 3 rupees, 30,000. Okay. Now, on the balance sheet date, how much of interest you need to pay? Interest to be paid to foreign currency bank, foreign bank. How much? You borrow 10,000?
10,000 to 5.
The interest rate is 5% into
48.
On that day, exchange rate is 48. 10,000 into 5% into 48. So total you need to pay 24,000. This is component 1. No problem. Happily you can pay this. But there is an exchange loss, 30,000. Pavan sir, this exchange loss 30,000, can this be capitalized? This is the question. Now let us check what is the interest cost that might have been incurred if you borrow money in India. Okay, interest that would have resulted if the loan was taken in Indian currency, if the loan is borrowed in INR, then interest cost is equal to, when I borrowed 10,000. How much I got? 45 pounds that day, 45 rupees per dollar that day. Okay, into how much I would have paid? 11%. Can you calculate and tell me how much it is?
49,500.
49,500. So I lost, sorry, my loan is 49,500. My interest on loan is 49,500. Now, difference between interest cost in foreign currency loan and local currency loan. Foreign currency loan and INR loan. Okay, so can I say that it is this minus this?
24,500.
How much it is? 49,500 minus 24,000. So it is 25,500. So your exchange loss is 30,000, no? It has two components. Exchange loss 30,000 has two components. One is to the extent of difference in interest cost 25,500, which can be capitalized, over and above difference in interest cost, which should be charged to P&L. You understand? So this difference 25,500 can be capitalized. So total borrowing cost that can be capitalized is equal to interest plus foreign currency exchange loss to the extent of interest difference, which is 25,500. So now total borrowing cost as per accounting standard 16 is 49,500. Basically, what is this amount? If you borrow money from State Bank of India, you would have paid this much. So ICI will say total 49,500, up to this I will allow you. Beyond that, it is your cholesterol, your masti, you are jumping more. So you bear the loss. Why will I allow you to add it in asset?
Sir,
Tell me.
Sir, why are we taking the difference rate as a criteria instead of why we are not taking the rate that can be capitalized for local rate for not capitalizing? Is it to minimize the borrowing from exchange rate, or?
No, what you need to understand is this is actual. This is notional. You are taking this 49,500 as a notional amount because that loan never existed. Your actual loan is only in Barclays. You do not have INR loan, but ICA is taking, a benchmark. If this money is borrowed in Indian currency, Pavan might have spent 49,500. So total amount of borrowing cost, I will accept up to 49,500 only, which comprises the actual interest cost paid by Pavan in Barclays in UK plus differential amount calculated in some mechanism, so the total will come to 49,500 only. It will not exceed that.
Okay, sir. Okay.
Make sense? So now interest to be charged to P&L. No, not interest. Foreign currency loss, foreign currency exchange loss to be charged to P&L is equal to total incurred 30,000 minus in the 25,500 they capitalized. So 4,500 to be charged to P&L. So this 30,000 basically has two components. What is that? One component is capitalized to the extent of difference in interest. Another component is over and above. So 25,500 capitalized because of a reason. Capitalized to the extent of difference in foreign currency and local currency interest. Balance 4,500 to P&L. That's all, ladies and gentlemen. So see the answer. Therefore, out of 30,000 increase the liability towards principal amount, only 25,500 will be considered as borrowing cost. The total borrowing cost would be 49,500, which is interest 24,000 foreign currency plus 25,500 difference. Remaining 4,500 would be charged to P&L. That is what the example is. And I'll tell you one secret, okay? Many students, many faculty, they leave this example. But imagine if this comes in the exam, very easy to get 5 marks, 6 marks. Very, very easy. So Devika, is this clear?
Yes, sir.
Yalini, is this clear?
Yes, sir.
Now tell me, are we done for the day with accounting standard 16? Now it is complete.